Hey guys, this is Eddie, and I just wanted to run through a few more examples today. I just finished up a VIP session a few minutes ago, maybe an hour or so ago, but I felt there was a slight gap in understanding on how to enter your trade and how to exit your trade. So I just wanted to go through a live example and just actually show what my thought process is when I'm entering a trade, and I'm just going to talk about going long on a trade. When you say going long, it means that I am entering a position whether I'm bullish or bearish. Going long means that I'm buying a call or buying a put. That's what going long means. Going short means it's just the opposite. I'm selling a call or selling a put. But for this particular example, I want to just concentrate on buying a call. So what I'm looking up at on the screen over here, hopefully you can see the screen well. I'm looking at my on-demand version of thinkorswim. This is the platform that I use for trading. And I've queued up an example here for Docusign. Docusign is currently trading at $270.96. And I'm watching the chart. I just plotted the chart. I'm on the daily here. I'm looking at 6 months, 1 day. So that's a good size chart, I guess. And I am seeing that basically I could potentially enter this trade as it comes into my buy zone. So I have marked by buy zone somewhere here, just for the purpose of this demonstration. Let me go ahead and put that in here. This is my buy zone, somewhere in between $265 and $270. And I'm expecting that once price comes into my buy zone, then I will buy a call. And my thesis is that price is going to turn around and hopefully right up to about $288. So that's about an 18-point move. It's about an 18-point move that I'm expecting. What we learned by looking at the option chain is that Delta can tell us what the expected price of premium is. So I'm going to talk about that a little bit. And for this example, I'm just going to choose a short expiration date of maybe July 30th. Okay, so 15 days. I'm going to give myself 15 days. And I'm going to switch these from verticals to single on my option chain. Let me just clarify a few things. When I'm looking at the option chain, I've got two sets of numbers here that are important to me. There's this set of numbers right on the left side here. Those are the calls side, and on the right side is the puts. On the call side, which is where we want to be when we're bullish, there's the bid and ask. Ask is where we're going to buy our premium. And then there's always delta. Delta is what tells us how much the premium is going to increase for every $1 movement of the underlying. All right, so docu is the underlying in this particular case. And we've identified that if we choose a strike price somewhere in this buy zone, either at 270 or just slightly below or even slightly in the money, then that would be a good striking point. Let's see what's available right now. And I am going to choose the at the money option here. So 270 is going to be my strike price with a 15 days to expiration. That's what that 15 in parentheses means. And the premium that I'm choosing here is $9.65. You've heard me talk about the 100 multiplier. That means I'm going to spend approximately $980 now, $975. It's changing here because this is a trading day and the market is actually moving. So to set these up, now you know me, I like to set up bracket orders, meaning that I want to place my order, take my profit, and also put in my stop loss all at the same time. Oh, that premium is actually moving away from us. You can see how it's increased just in the time that we've been talking here, the last few seconds. Let's go ahead and set these orders so we can talk about it a bit more. So right now it is trading at $10.10. We've missed a few cents here in the last 1 minute. and we're expecting that we're going to have an $18 move. So what's my expected premium in $18? I simply multiply 18 times 57, so 0.57 times 18. That's $10.26 in premium. So $10.26, I'm going to add that to my take profit. So if I enter at 10 and I add 10.26, then I should expect to exit this trade at approximately $20.36. Right, so 20.36 is where I expect. Now we're going to round this down to 35 because the platform likes 5s and 0s at the end. We're losing premium as we talk, so let me enter this trade real quick. 10.35, price is increasing. Why is that increasing? Because price is going up. So I'm going to click on trade one more time here, and I'm going to lock it in. So 10.35 is how much I want to pay for it. Exit at 20.35, stop loss of 9.35, meaning I am risking $1 per contract, and I'm going to buy 5 of them, so that is a $500 risk for potentially 1,000 in gain. Okay, I'm going to confirm and send. Verify that that is in fact what is happening. I've got 3 orders. This is my entry. The middle one, or order number 2, is my take profit, and then order number 3 is my risk management plan. I'm spending 5,175. That is also my max loss, and my max profit will be determined at the point I exit. Let's go ahead and send this. And I just got filled at the nice price of $10.23. I asked for 10.35. I got filled at 10.23, so that is good. Remember, that is how limit orders work. You're saying that you want that price or better. In this case, we got better. We got $10.23. So that's good. To monitor that trade, I would normally go to the monitor tab, and then I would look in my open positions, or my position statement. Right now I'm losing about $2.50, and not too worried. That is nowhere near my stop loss, so it's all good. We're sitting pretty tight and nice. While this is big, oh, look at that, we're now up $72. It's pretty healthy. So while that is working, let's go ahead and analyze and see what the math is behind what we just did. All right, let's see what we just did. When we chose to enter at 10.35 or 10.23 as the case may be, at the 270 strike, we chose the 270 strike because that was at the money, right? Remember, when you're choosing where to place your strike price, you either want at or in the money. My preference is in the money, or as close as possible as I can get. I don't want to go too far out of the money, and the reason is the trade-off is not very cool. So what I mean by that is the deeper I get into the money, notice my delta increases. So the faster I can get my target profit. The farther I go out of the money means that the strike price is greater than the current price. Current price right now is 274. Then my delta decreases, and it can decrease all the way to almost 0. Whereas on the upside, it can increase all the way to 1. 1 is the maximum that it can possibly be. Let's take a look at, I think I did something here that I want to change. I want to change my sell order from a day order to a GTC. I forgot to do that. We can make that change here pretty quickly. Let's go and do a cancel replace, and I'm just going to change that from day to GTC. The reason I am doing that is because if this play does not take place today, meaning that I don't reach my profit target today, then this order will remain open in the system for 90 days. That's what a GTC order means. It's 90 days, at which point it just drops or disappears from the system. So we do want this order to be in or to survive longer than today, and that's great. Let's go on confirm and send. We're simply changing the day to GTC. That's how you do it. That's done. And let's do the same thing for our stop loss. We also want to be stopped out if we fall below the 935. So I'm going to do cancel replace, and this is also GTC. All right, 935. You know what? I'm going to increase my stop here. Is that right? I'm going to increase my risk because I don't want to get stopped out of this trade. I think it's a good trade. You know what? I'm going to risk another $1,000 by reducing that. So confirm and send. Did I change it to GTC? Yes, I did. Okay. So now looking at my trade, it's still playing out very nicely. Current price has now increased by $4, so that's good. And remember, our strike was 270. So my thesis here is that this has turned around sufficiently, and it will begin to become green here in a second or whenever, sometime today, maybe tomorrow. So we're just gonna let it play out. It's playing, it looks like it's going between red and green, but that's okay. We've already left our buy zone. We're heading up. That's how I would do it. So let me go ahead and monitor these to see where we are. And it looks like we're up $385 so far. We spent, let's go to our positions account statement and go to our cash and sweep. Cash and sweep, here you go. All right, we can do the quick math over here real quick. So we got filled at 10.23 and we bought 5 contracts. So 10.23 and we bought 5 contracts. We pretty much spent $5,115 and our risk right now is $2,000. So that's it's about a 2 to 1, 3 to 1 kind of ratio. That's okay. That's good. Let's look at the chat to see how we're doing. Nothing much is happening, so I'm going to fast forward the time here. Remember, this is thinkorswim's on demand, so I can actually fast forward just to backtest this particular scenario. And look at that, we are turned now green. We're still going up. We have not hit our limit, so let's keep going. Nothing much happening yet. This candle is moving very, very slowly. I'm actually on the day chart, so let's switch that to the 15-minute to see how it's playing out. So we had some green movement. We're going up and down. I generally don't like to go too deep into the time frames here, like the 5-minute and the 1 minute. That's just additional stress. No need for that. So the lowest I normally go, especially on a swing trade, is maybe the 15-minute. So I will let it play out. If it gets stopped out, it's for a good reason. It just means the trade wasn't good. So that is that's okay to do. It is now about 10:13. We've been in this trade for about 30 minutes. So that's good. Let me go ahead and advance the time maybe to, see, 12 o'clock. So 2 hours on the 15th. See what's going to happen. And we're pretty close to our stop, but we haven't been stopped out yet. We have not been stopped out yet. We're still good. Let's go to the monitor screen here, activity and balance and positions. We're down $627, right? We're down $627. We're still not worried because we're still within striking distance of, we're still within what our stop is, our stop loss. And that's a good segue maybe to talk about some of these things. When you're in a trade, when do you start worrying, right? When do you start worrying? You see red over here, $570, $600. Should you be worried? If your stop loss is $2,000, No, don't worry, because you've already committed to the trade and you have come to peace with a mindset that if this trade goes south, if it doesn't go well according to plan, you could lose $2,000 because you do have a stop loss of 2,000. So 577 is still about, it's far enough away, so I'm not too worried. Not too worried. Let's increase the time here to, let's see what happens maybe in another 2 hours. So in another 2 hours it's going to be 4:10. That's 2 o'clock. All right, things have turned around obviously, so we're now at 275. And let's go back to our monitor. Hey, look at that. 2 hours ago we were losing 500. 2 hours forward we're now upwards of 685. I should mention here that if you see green and you're comfortable with it, you can get out, right? You can get out. We still haven't hit our target profit. The way I know that is I am looking at my monitor tab here, and I have a sell to close. I have a target price of $20.35, and we're at 11.32. So I'm looking at the price here is my target, and the mark is where the current price or the current value of my premium is, right? 11.42. So this is still a working order, and we are up about 600, just under $600. So that's a good thing. This is probably going to be a swing trade, and that's why in fact we set this up to GTC so that it doesn't kick us out overnight, right? And so we're just going to let this one bake. We are sitting at 597. That's cool. I'm just going to fast forward this clock. Let me switch back to daily here. Yeah, we've got a small doge here. I'm going to fast forward to the next day, since this is actually 3 o'clock. Let's do 10 o'clock. Or let's do 9:45. 09, just after the market has opened, 9:45 on the 16th. Can we do that? Is it possible to do that? Yes, it is possible to do that. So we do have data for the 16th. That's great. And it looks like we actually gapped up. This is a good thing. This is a good thing for us. And price seems to be continuing on its upward movement. Let's go to the monitors tab and see what we're doing. We're up to 1592, and our profit is now $2,810. This is after 1 day, by the way, with 5 contracts. Remember, we invested $5,115. Our target is still $20.35, or when DocU has reached has increased by $18. So this is approximately where we are expecting to get out. All right, once we hit this resistance level over here at 288.1, that's our target exit point. All right, if we can exit at that point, that will give us a healthy return. Haven't fully calculated how much, but it will probably be in the range of about maybe $3,000-4,000. But let's play with the time here and see if we can advance by another 1 hour. So 10:46. Let's see how we're doing. Yes, it is still going green. I'm loving this. It's pre-buffering for data. And this is a day trade. It could take 1 day, 2 days, maybe 3 days. But we have a healthy stop loss. In fact, we should go in and set our stop loss a little bit higher to protect some of the profits that we've already done. We've already made. See where we are. We're still at 28.47. 28.47. Let me show you how to adjust your stop. Now, remember that we entered this trade at We sold this trade at $10.23. I'm looking at this. If you can see my cursor moving here, $10.23, and we are now currently at 15.9. It would behoove us to move our stop loss up to, from $8.35 to something like maybe $13, $14, just to protect some of that profit. What does that mean? Let's see how do we do that? Current price is 282. If we drop below 280, we want to protect that. So let's see how that can work out. Go to the monitor. I am going to cancel and replace this market order, this stop loss order. Simply right click anywhere on this and do cancel replace. Let me show you all a cool trick here that you can do. Right now my market is 8.35. That is what I am saying, but I want you to watch this expected docu price move, right? So it says that if the price moves to 273, that is when the premium will be worth 835. Well, right now the price is 282, so I probably want to increase this to about maybe 270 or even 280 or 279, give or take. So I'm just going to simply move this, and if you notice, the expected price here is also increasing. You know what, I'm just going to do 10 to see what that would be. So 275, 276. That is still a little low. Let's keep going. You know what, I'm just going to type over here 12. Okay, 12. So if the price goes below 278, it's going to take us out at $12. Right now the current price is $15. It's ranging between $15.05 and $15.90. If you're watching my natural to mid, that's where we are. So 12 is $3 away from that. So that's a good place to actually set or update my stop loss. I'm going to confirm and send this one. And what I'm doing here is simply just protecting the profits that we've already made. Okay, and if you go to the chart, you notice that my stop has moved from my buy zone into here. So that's a good way to protect those kind of profits, right? We still have quite a bit of time in this play, and going back to the monitor screen, we're still at 28.35 in terms of profit. It's still very good. You can exit at this point. 2,800 is a pretty good play, based on an investment of $5,115. So that's pretty good. But we are taught to be patient, right? Patient. So we know that this will potentially hit that 200 and maybe even go to 288 level. So let's just wait it out. I'm going to advance the time here so we can see what's happening. All right, it's pulling back a little bit. Is it pulling back a little bit? Yes, it is pulling back a little bit, but we're still on track. We are still on track. Okay, I am going to actually bring down my stop loss a little bit lower because it's going to be threatened here, yet I know that, or I feel that it has a really good chance of an upward movement here. Right, so let's go ahead and adjust our stop loss here. Bring it down a notch. Do a cancel replace. Bring it down to about 11. We just don't want to be stopped out. So 11. Okay. I'm going to advance the time. It's now 11, and I'm going to advance it by another 2 hours to 1 o'clock, which is 13 hours. 1300. It looks like we've recovered. We've recovered. We are still going up. Let's see what we have in the monitor. We're still at 28.45. So we've lost some ground, recovered some ground. We've lost about 400 in the last 2 hours. That's okay. Remember, we're targeting $20.85, so we're still about 500 away. We're still about $500 away, times 5, which is 25. Since we have 5 contracts, we're still about that much money away from our target. So we'll let it play it out and see what happens. Let's go ahead and advance that. It continues to go up, and I'm going to just push these to pretty close to the end of the day, which is 15:12. That is 3 p.m. Eastern time. And it seems to have stalled in that place. Seems to have stalled over here. So what's in all right, 27.85. Right now we are up $2,785. We're pretty close to the end of the day. I'm not sure what's going to happen tomorrow. So what I would normally do is I would lock that in and get out. Even though my target was still up there, the $290, I am going to exit this trade, right? I'm going to exit this trade. It's a good trade, been in there for a day and a half. And so I am going to lock it in. How do I lock it in? I am simply going to right click on my take profit order, which right now is set for 2035. Simply right click, do a cancel replace. I am going to unlock this price so that I can get current price, right? Current price is 15. The mid price is 1580. You know what? I think I'll shoot for 1580. How about that? Let's go with the mid price of 15. You know what? Let's not be greedy. Let's go with 15 and a half and confirm and send. And I just got filled. Okay, I got filled at 1575. So monitoring that trade, I was able to lock in $2,760. I could have waited until tomorrow to make the additional 2,000, but you know what's 2,000 between friends. So let's go ahead and lock in that $2,760. It's a good deal for a one-day play. That's a 50% return on investment. I think it's pretty darn good to spend $5,000 and get back $2,700 in just one day. So that, my friends, is what I would normally do. That's how I would play that. Some concepts that we learned today or on this call is how to use delta to approximate where your premium is going to end, how to choose your strike price. So remember that the price at which we were playing with was 270, so we chose a strike price of 270. That's at the money. I always play at or in the money because I firmly believe that that's the better option, and you're buying time together with that, so the value does not decay. In fact, it increases pretty quick. So that is why I choose that. And also I want to be in the trade for as short a time as possible. So the deeper I am in the money, remember we could have gone with say a 265 strike price, which means that we would have been earning $80 for every $1 movement, which would have been even better than the 55 cents that we were getting to begin with. So that is how I would play that. Hope this is helpful. If you have questions, by all means, just leave them in the comments or just DM me, and we'll try and help you out. Thanks so much, and you have a great rest of your day. This is Eddie.